The FT1 right now lower by 62. The CAC 40 is down 106, and the DAX index lower by 291. In Asia overnight, right across the board, Hong Kong was the hardest hit. The Hang Seng index lower by 3.87%. Mornings with Maria is live right now. And it is time for the word on Wall Street. Top investors watching your money. Joining me right now is Morgan Stanley Private Wealth Management Senior Vice President and Portfolio Manager, Caterina Simonetti, Baltic Capital Markets Chief Strategist, Catherine Rooney Vera, and Michael Lee, Strategy Founder, Michael Lee. Great to see everybody this morning. Thank you so much for being here. Michael, kicking things off with you with a market that is down 372 on the Dow as the conflict between Russia and Ukraine weighs heavily on investors with oil prices skyrocketing this morning. The price of oil is up as the House is now considering a ban on Russian oil imports. Crude up as much as $125 this morning. It hit $130 in the overnight session. It's up 38% in the last 2 weeks. Brent is now at $125 and change. It also hit $139 overnight. Michael, what do you want to do as an investor looking at these numbers?
Yeah, so my largest holding for my clients is XLE. It's the energy sector. It's really one of the only places to hide in this market, and all the bull themes for this asset are in effect. And the reason you wanted to get long in the bull thesis prior to this war was a supply-demand imbalance, and you're seeing backwardation in the futures curve, meaning people were paying a premium to buy the physical than the futures contract, which supports that bull case. And now you have these geopolitical tensions. And from a supply-demand imbalance, when you go back to the COVID lows where we had negative futures prices, you had a 1.3 billion barrel excess. All that excess has been burned through, and we are now running, 300 million barrels less than the 5-year average in terms of global excess supplies. When oil hit 148 in 2008, we were only 66 million barrels below that number. So I think there's a lot of room to run here because the demand from the U.S. side and a lot of other parts of the world is not going to slow down. It's not going to stop. Maybe we'll see some demand destruction, and you add all this geopolitical tension on top of it. You know, the XLE, and then you have your Chevron, Occidental Petroleum. Warren Buffett just took a large stake in that, and Chevron and Exxon both trading in the mid-teen multiples, close to 4% dividends, and a lot of wind at their sails. That's how I'm playing it. So far, so good for me this year.
Yeah, Occidental this morning up about 9%. But I guess, Michael, you've had a great investment in energy and have obviously exposed your clients to really the hot spot of this market. My real question is, what's the impact on the rest of the market? If oil prices keep going higher, sure, it's good news if you own oil stocks. But what about other companies that are having to swallow this cost, like transportation companies? Is this going to be an issue for the broader economy?
Yeah, absolutely. We are at almost a triple from November 2020 in terms of the price of oil. When you wage war on this industry, the moment you get elected and you come in, this just hurts everyday Americans. This hurts, it affects every part of our supply. If the price of oil goes up 30 or 40%, I think the economy can withstand that. But you're now getting close to up to 300 since Election Day of 2020. Like you said just a moment ago, up 100% year over year. The economy is definitely slowing. This is going to accelerate that. So, my normal rosy outlook is getting cloudier by the day. And then also with these sanctions and what's going on with oil, you're affecting the dollar's reserve status. So this is just getting ugly very, very quickly.
Well, Catherine, it's not just the energy